Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We provide actionable investment ideas and timely market commentary to hedge funds, family offices, sophisticated investors. We just want to let you know this call is being recorded. If anyone's uncomfortable with that, you can feel free to disconnect now. One of our favorite things to do at Deep Knowledge Investing is highlight the knowledge of our incredible board of advisors. Today, we're very excited to welcome Howard J. Klein. Howard spent over 30 years as a C-suite executive in the casino industry. He worked for and ran companies like Caesars, Bally's, the Trump Taj Mahal, and Claridge in Atlantic City. He's done consulting arrangements in Asia, has deep connections in the Macau market, and talks to them on a weekly basis. Howard and I have been talking about the gaming industry for years together. We frequently quoted each other. There is no one who knows more about the gaming industry, either running it or investing in the space, than Howard J. Klein. For those of you who are as impressed with Howard's knowledge in the space as I am, we'd also point out that he writes the House Edge, which is one of the most popular subscription newsletters on Seeking Alpha. It is fantastic. And anyone who's interested, please check him out on Seeking Alpha or get in touch with me, and I will put you directly in touch with Howard. Howard, thrilled to have you on, and thanks for making the time.
Well, thank you very much indeed. I very much look forward to this.
Terrific. So why don't we start in the market closest to home? Let's talk about Las Vegas. Obviously, it's starting to reopen after the coronavirus situation. What do you see as the path to maybe getting back to a more normalized operating environment there, and the timeline? I'd love to know your thoughts on that.
Yes, well, I think initially we are looking at a baseline as we sit here now of airport arrivals, which McCarran Airport arrivals are the be-all and end-all in the sense that they represent the most significant chunk of arrivals into Las Vegas, and that is roughly running about 60% down from normal levels. So for example, in the month of August, there were about 1.7 million arrivals, which represents a reduction of 40 to 50% of what is normal. Now, there are roughly 43 million arrivals in Vegas in 2019, and we're looking for as much as a total 10% or more reduction for 2020. Perhaps even more. However, the drive-in business, particularly from Southern California, has continued to slow build. So for purposes of the properties now open, what I think realistically is that if we take into consideration two basic factors. One, what is their overall cash position and their capacity to withstand in a buoyant solvency between now and a presumed end of the pandemic, which would obviously mean the arrival of a vaccine and a significant inoculation level among the general public. So the overall consensus I can feel now, this is based on two things, as everything I do is based on one, the basic statistics which are available in general to analysts and to people who observe the industry, plus my own inside sources in high levels and mid levels, and by the way, I might add even at customer facing levels in these casinos. And the rough consensus, as I now see it, is that a return to some degree of tangible break even will occur as possibly before the end of Q1 21, which constitutes roughly achieving between 40 and 45%, maybe in some cases 35% of the ongoing revenue flush that normally accompanies a standard year in Las Vegas. Having achieved that, we can then assume that the cash burn levels, which run all over the place from anywhere from 1.7 to 3.3 million a day, will have run their course, and we will be looking at break even. So right now, as far as the main components of the sector is concerned, such as Las Vegas Sands, Wynn, MGM, Caesars, etc. They are all extremely well upholstered for what I think is at least a 12 to 14 month run of complete solvency. If my estimate of break even is achieved within Q1, that cash burn will considerably be reduced. There will be none. And I must say that right now, that cash burn level assumes zero revenue. So that's a baseline of baselines. Now, as we move further on into a rebuilding of confidence among fly-in customers, which right now is running low, and a continued flood of people, which is reasonable considering the circumstances, from Southern California and drive-in locations, I think we could be looking at, as I said, a 1Q considerable achievement of reaching break even, and that I see as a catalyst in terms of the sector in general.
Okay, so I'm going to sum up what you're saying. I'm hearing you making 3 points. One, in a zero revenue environment, most of the Vegas casino companies have at least 12 months of liquidity. Two, you think they get to cash break even in the next 4 to 6 months in general.
Correct.
And three, you think cash break even takes place at roughly 35 to 40% of revenue, which is kind of interesting because that's what Las Vegas Sands is saying they need in the Macau market as well.
That is correct. And it's very interesting that the basic principles that govern the running of casinos, be they in Macau, where you have this enormous revenue, to Las Vegas, where you have a mixed revenue pie with a much higher percentage of non-gaming as you do to gaming. Now, I think Macau currently is somewhere around an 85, 55% break between gaming and non-gaming, whereas in Las Vegas, it's 65, 35, and a bit more in U.S. regional casinos. But the basic principles that drive gamblers to casinos, interestingly enough, are the same. It is a core humanist viewpoint. You come expecting to lose, but hoping to win. And that seems to cross all ethnic, regional, and historic lines. So there is an identification that you could make. So it is not surprising to me that the break-even levels, given the relationship between cost, revenue, and general markup, for want of a better word, between the various games and overall gaming and non-gaming, particularly in Las Vegas, is very similar.
That's a fascinating observation because we've known for a long time that culturally, the amount of gambling in the Asian market is much greater than in the US market. But what you're saying is that there are similarities in the ways that those groups of people gamble and the attitudes that they take into the possibility of winning or losing. You're saying there are more similarities than differences.
That is correct. And what I suspect is, and I mentioned this the other day to you, that I have a former Columbia classmate from way back in the day, who subsequently has become a considerable private researcher in the field of mass consumer attitudes. And he's a specialist in what we call ethnographic surveys and research. He is currently involved in doing an ethnographic survey in Asia among participants in mass assembly businesses, which cover casinos, cinemas, sporting events, concerts. And some of the preliminary results he's been kind enough on a discretionary basis to share with me. And what has happened as a result of this is that his early indicators are that at least in Macau and other key Asian markets, we're finding an inclination among patrons to return in greater numbers faster than many standard economists and analysts are currently forecasting. For example, he was kind enough to share some of the early top-line results that his survey indicated. First of all, which is most interesting, his sample indicates that Asian players are much more strongly inclined to return to casinos than they will be to cinema, sporting events, and theme parks, which is quite interesting, I think. And that, Gary, is definitely indicative of the cultural aspects of the Asian player, who have a distinctly higher gaming profile than non-Asian people over time. But the core motivations between Asians and non-Asians who are regular gamblers are the same. That's my point. What is most interesting is that top line figure indicated here is that between 57 and 60% of those players who he asked when you are satisfied that a sufficient number of people have been inoculated, and that's much less than what the experts are saying in terms of achieving herd immunity, reaches 40%. How soon are you likely to return to the casinos in Macau? And the answer came back 57 to 60% as soon as possible, which I think is a startling statistic, and it is considerably higher than it is, I think, in other parts of the world. So that's one thing that came through. The second question that came through, which I think is quite interesting because it relates to some extent to the outlook that the IMF has for the Chinese economy. And 88% of the individuals who responded to the survey said they would be gambling about the same amount of money in terms of their budgets than they did prior to the pandemic. And that left about 25 or 30%, some odd, who said they might be gambling a little less. But the most interesting part of it all is that the number of respondents who said they would not be gambling at all, that is to say, they will not be returning to casinos, came below nil, so that everybody expects at various levels, at various time, to return. The largest single percentage that said they will expect to return within 30 days of feeling a level of comfort.
Howard, that's fantastic. And I just want to point out for the people who are listening that the study that Howard is referencing, talking about the Macau market recovering faster than expected and the willingness and eagerness of the gamblers in that market to get back into casino even before there's been widespread inoculation. That study has not been released yet, and Howard has gotten permission to talk about it on this call, but this is the first time that that information is being released anywhere. And thank you so much for bringing those contacts in and letting this be the place where that information gets out. We appreciate it.
Well, thank you, Gary. I might add one third early result. And again, I always like to preface this by saying, like so many surveys and polls, this is a snapshot, not a portrait. So things could change. But the most interesting aspect of the thing is when we asked, when my colleague asked, what will be your gaming budget? The incredible thing is that I think something like 88% of the respondents said they would be gambling about the same, and another 11% said they would be gambling more, which was remarkable. So that what this shows us, I think, it is directly linked to, I believe, the latest IMF figures, which is showing a 1.2% gain in the GDP in China for 2020. However, this takes a significant leap to 9.2% in 2021. Now, that fits enormously the fact that the basic Macau patron is either a person working for a company which has apparently done better than maybe some thought, despite the many negatives, I'm sure, that occurred during the pandemic in the greater macro Chinese economy. But so many of them are small entrepreneurs, and they seem to have come through this with flying colors because their expectations are that they're going to come back sooner. They're going to be gambling about the same of what they did before. A smaller percentage say they'll be gambling more, and virtually nobody said they're going to be gambling less. So they're kind of anxious to get back into action. Now, that is in some degree contrast to some officials in Macau and in the medical as well as the economic communities who do not feel that Macau will return to 2019 levels until 2022 or 2023. So one of these things flies in the face of the other. One of them, our friends, early results indicate people are anxious to get back into action. The officialdom says this is going to take a hell of a lot longer than we think. So somewhere in between, there's got to be a reason for this. So I plumbed to a great extent, not only my former associate who was conducting this survey, which won't be published till late spring next year, after it is given to its clients, is the concept between what pent-up demand really will be versus what the data based on past performance thinks it will be. The average number of people who responded to this private survey indicate that pent-up demand may be a significantly larger percentage than what officialdom now believes. Officialdom is obviously going, and it's perfectly understandable, by its best estimate as to when we'll have the arrival of a family of effective vaccines, and two, when herd immunity will be achieved, which they put at 70%. Interestingly enough, the sampling, which my associate said is fairly robust, indicated that when they see that 40% of the people have been inoculated and or friends and family who have gone to Macau and are returning not sick and having a good time, they're ready to go. So this is quite an interesting change in terms of who do you believe? Do you believe the algorithms that spit out the fact that we have to have 70% herd immunity after the inoculations arrive? Or do we believe the feelings of people who are the actual players who said, we don't have to wait for 70% immunity. As soon as we see 40 to 45% inoculation going on, plus, and this is an important point, plus the protocols remaining in place at the casinos, we're ready to go.
Okay, well, I think that's reasonable to expect that there's a difference between what the officials expect and what the individual gamblers plan to do. Obviously, from your perspective, it sounds like you're willing to believe the players, and I'm inclined to believe your research on that. Let's talk about the numbers in the Macau market for a minute. There was a general sense that Golden Week at the beginning of October was a little bit disappointing. The thing that we saw was that the business went from being down 95% approximately to being down 85%, and people felt like that wasn't good enough. Our view is that the corollary was more encouraging, which means that business went from 5% of where they'd previously been to 15%. Essentially, they tripled the amount of business that they were doing in a matter of a couple of weeks, and sequentially, that looked pretty interesting to us. What are your thoughts?
I thought basically, I think the most important one of all is, and this again based on as late as last yesterday some discussion with some CEOs and other people, and some of them were old friends. So I find their take on this very reliable with me, because it's peer talking to peer inside the business out. So they're looking for October to come in at about between 65 and 70% of normal, which is a drop down from the 85%, Gary, that you measured, and looking forward to getting down as low as a 15 to 10% decline by Q1 21. So as you suggest, it's heading in the right direction. I suspect that much of this is coming from one of the factors indicated in this private survey, which is that more and more players are seeing friends, relatives, and associates returning from Macau. They're not sick. They are feeling fine. They're perfectly comfortable with the protocols that are in place, at least for the time being. That is to say, the plexiglass divisions between seats at the table, masks, taking of temperature, stuff like that. So that seems to me to be a reasonably good expectation. And drawing that further down into the investment part of things, I think that if we do indeed reach that level of 10 to 15% decline by the first quarter, I think we're looking for a considerable upside in the key stocks in the sector.
Howard, we agree with you. I just want to clarify one thing for the people who are listening who don't necessarily talk about the statistics in the Macau market the way you and I do. Just to clarify, what Howard is saying is that in the next 4 to 6 months, he expects that the Macau market, which is by far the largest gaming market in the world, will be back to 85 to 90% of its pre-pandemic revenue levels. And that would be an incredible recovery. And I think what you're also saying, correct me if I'm wrong, if that happens, we're going to be looking at a substantial increase in the stock prices here.
That is correct. What I think the analyst community that follows the Macau stocks, and of course some of the other Asian stocks, are looking at is that the past is precedent. They're looking at the numbers that say to them what has happened in past headwinds, such as the 2015 crackdown by Beijing on money laundering, on junkets, the imposition of facial recognition, one bad thing after another, when 2015 GGR took a dive. But what I think is missing here is, and I refer to the pandemic as the emperor of all headwinds. There's never been anything like this. There never probably will be anything like this of this intensity that will impede the Macau market and markets all over the world. I think that is the fact that there is a greater need, desire, and for the average Macau player to get back into action much faster than the data would show. And that's what I am currently looking at. Now, when I translate that in, I look at the run of key issues in the sector. When the pandemic broke out, obviously they were tanking at incredibly low levels. There was an opportunity for those with the risk profile to say, hey, this is ridiculous. I'm looking at shares like Las Vegas Sands and Wynn and MGM, and particularly shares like Galaxy that are down in the toilet. I'm going to load up right now and just have the guts to sit it out. Well, not that many people had the guts, but yet the stocks started to inch their way back up before, when people began to realize that the pandemic would have an end. Now, nobody knows about duration. I think the top medical experts around the world seem to be confused. As a matter of fact, some of the anecdotal information that came out in this study was that a great many of the Asian players who were part of this survey were very skeptical about official and medical releases about A, duration, B, arrival of the vaccine, and timing. And the reason for that was, and which is quite interesting, a large number of them said, we look at the official figures from the equivalent of China's CDC. It says the vaccine will arrive at X, and inoculations will take place at this and this pace, and then it's contradicted a day or two later by somebody else, and it's further contradicted, so that the average player is looking at all this and saying, if these great experts can't be certain about the duration and intensity of the vaccine, and also, by the way, about the appearance of a second wave, which is a big factor in all this, I'm going to go by what my eyes and ears tell me. What my eyes tell me is when they show video coming out of the casinos in Macau, and I see hordes of people at the tables, that's good enough for me. When my cousin and my aunt and my uncle, whoever it is, comes back to Guangdong and says, I had a great time. There was no problem. I wore my mask. It's great. That's what they're going by.
Right. It's the social proof of what your friends, neighbors, and family are doing that is going to get people back. That's a great point. Howard, before we move on to the important Singapore market, I want to ask you one other question on Macau. It's the unanswerable question, but we'd love to get your opinion. There is discussion that in 2022, we have the relicensing in Macau, and we're curious to know what you think the Chinese government will do. Will they relicense everyone? Will they add new licenses? There's talk that because of the conflict between the United States and China, that some of the companies like Las Vegas Sands and Wynn may have difficulty getting their licenses renewed. What are your thoughts? What do they do here?
Okay, my thought basically, and this is based on my own sense of where we are on these various political and economic issues, and the conflicts involved in the trade issue, etc. And that is that all the concessionaires will be renewed. I think there's a very, very strong chance that will happen. I think that they recognize two things. One, that we are dealing with a major setback in the pandemic. And two, regardless of the delays we're seeing out of Japan, I think there is, and I got this, by the way, from a friend in Beijing itself, there is concern because China tends, as in many parts of Asia, to look at things from a much longer perspective, that they're concerned that Japan will take form sooner or later, maybe not until 2025, but that the gaming tax indicated by some of the enabling legislation indicates it will be between 28 and 32%, which is a bit less than Macau. It may wind up being exact Macau, and that the Beijing government and the Macau officialdom may impose some kind of civic improvement mandates on the concessionaires as the price for renewal. And the third thing is, and I've dealt in Asia for over 30 years, is that, to put it simply, I have never seen the Chinese leave a dime on the table. Whenever there is a significant amount of either employment or revenue involved, they tend to take a very realistic view, totally divorced as much as possible from ideology. And that's been my experience. That, of course, that could change. And this, again, prompts this recurring idea that some concessionaires could be singled out. That is to say, Mr. Adelson, who has been a very strong and visual supporter of President Trump, I think that's utter nonsense. Adelson has been involved for decades in Asia. I happen to know his infrastructure of strong, positive connections to both in Macau and in Beijing will remain in place because they're based on the fact that he has invested billions upon billions in Macau and in Singapore. And right now, my best information is that having walked away from Japan, that Mr. Adelson is very seriously considering a third Asian spot for the significant investment in building an integrated resort. So I think there is no question that there may be a lot of talk about it, but I think that the economic and pure considerations of maintaining a viable Macau business by the people who have invested over 40 billion US there is very important to both Beijing and Macau, and I don't see any major change in that. The one ant of the picnic, possibly, and this is very, very remote at the moment, but when one is dealing with an ideological economy like China, one never knows, is Henkin Island, where they're building family resorts, and whether or not they will eventually be able to have casinos is problematical at this point, but it's just something to keep in mind.
We think that's a great point, Howard, and we agree with you. If you're the Chinese government and you're trying to run Macau, excluding two of your high-end operators like Las Vegas Sands and Wynn, it just don't work to your advantage. And you're right, they are better off not being ideological in that part of the world. We're going to move on to our version of the lightning round, down to our last two questions here. We've talked about the recovery path in Las Vegas and in Macau. Would love to get your thoughts on what's happening in Singapore. And after that, we'll move just to our final question.
I'm extremely bullish on Singapore. I think that the basic underlying strength of the duopoly militates for a very powerful future for Singapore. I think the economy will remain strong. I think, by the way, there has been an increase in migrant business from other venues into Singapore for any number of reasons. The properties are outstanding. I think that the $3.5 billion that's being pledged by Las Vegas Sands and Spinoza over the time in terms of increasing its capacity in terms of rooms, in terms of non-casino amenities, will prove very, very strong. So I am extremely bullish about Singapore. I think the government has been very responsible in responding to the pandemic, and I definitely see a very strong future in Singapore.
That's a great point. Our biggest concern in Singapore over the last few years has been that the Marina Bay Sands produces an enormous amount of free cash flow. It's been a great investment, but there hasn't been a lot of growth there. And the company is investing now in that fourth tower, in a concert space. By the time that's built, it probably will be possible to have mass events there. They're going to get growth out of what has been for years a no growth market. That's very bullish. Last question for you. We were talking about Las Vegas. Oh, actually, we've got another one from Christopher. Let me get you on the record on this one. Las Vegas Sands versus Wynn. Which stock do you like better right now?
Right now, I like them both, but I must say I like Las Vegas Sands better. And the reason for that is I think Las Vegas Sands has a terrific market share position in Macau, roughly 23.5% of the market, which is substantially dependent on mass. I expect mass return to Macau to be at a speedier level, as I indicated before. And I think its position in Las Vegas is pretty stable. I think Wynn is also in good shape, but I think they're much more dependent on VIP, which initially it was thought would return sooner. My own indication is that VIP, as I've noted, having dealt with VIPs myself for many, many years, is the inclination to do what I call going through a period of bankroll fatigue and bankroll replenishment. Bankroll fatigue happens when VIPs can go through a run of either bad luck, either at the tables or in their businesses, and they will curl back their expenditures and wait to accumulate larger amounts of discretionary bucks and come back into the picture a bit later. So that's my expectation. So that is where Wynn will shine. Where LVS will shine, I think, is in the mass version. The one missing link for all Vegas casinos, obviously, is going to be the casino as the convention business.
Right.
That will take time to come back. It's going to inch its way back, but it certainly will be back, in my view.
So those are the two reasons we like Las Vegas Sands better as well. More exposure to the Asian markets, less exposure to the US markets, which we agree with you are going to recover more slowly. And we're seeing the same thing you are. The mass and premium mass markets are coming back before the VIP market. This is the last question here. Comes in from Chris Bell, Deep Knowledge Investing Board of Advisor member. He wants to know if you think Steve Wynn will reappear anywhere in any capacity. Do you have an opinion on that?
Yes, I do. First of all, let me stipulate, I happen to know Steve Wynn very well. We were industry colleagues for a while. We spent much time together, having quiet dinners and lunches and walking around. So I have a pretty good insight into his mind. I would say it is going to be very possibly surprising if we do not see some kind of duration of what I call public image repair, through which Mr. Wynn, who was, of course, in his late 70s, might reappear in one way or another. It might be in a non-casino hotel. It might be a big surprise. He might find himself retained as a special consultant. But it is very, and again, I am characterizing this entirely on personal terms, having known the man, is that it's very hard for me to conceive, despite the fact that he is one of the world's most prominent collectors of great art and is pretty happy with the billions he walked away with. It is very hard for me to conceive him much longer for not being active in some way in the industry. It all depends, and he's an extremely astute observer of the trends of public opinion. And I think if we reach a point where there has been some repair of the public image, I would not be surprised if we find him involved again in some way, and knowing him, where he's prepared the ground very carefully for a return through an okay by the regulatory authorities.
Howard, fantastic getting your perspective. We just point out to everyone that not only does Howard have a clear view on how these casinos are run, but he knows the individuals doing it. There is nobody better connected in the space or with a more educated opinion. For anyone listening to this who is as impressed with Howard's opinion and knowledge of the casino space as we are, we would advise checking out the House Edge on Seeking Alpha, where you can get more of his perspective. If you can't find it, shoot me an email. I'll put you in touch with him directly. Howard, thanks so much. Fantastic getting your point of view.
Gary, thank you so much. I enjoyed it very, very much, and my best to all your associates.
Terrific. Thank you. Everyone, please feel free to disconnect. Thank you so much.